Ankit, can you please check if you're live?
Yeah, I think we are live.
Okay.
Good evening, everyone.
Check if you're live. Yeah, I think we are live. Okay.
Good evening, everyone. Welcome to the second part of the technical analysis series. We have with us Mr. Prashant Sawant today. Rahul will be joining with us a bit late, but we'll be starting with Prashant. So last time we had a great session on the basics of technical analysis. Prashant introduced us with some concepts of technical analysis, some basic concepts of technical analysis, and he shared with us a link to his basic course on which he has taught us about some lines which we'll be covering today. So Prashant, without further delay, I think all of us know you now, so no need for introductions. We'll just start with the sessions. Prashant, you can start with the magic line. Over to you. So Prashant, that is a magic line, I suppose. That is excellent. I think that's a very simple concept. Great concept, I think. Oh, I think I have just received messages on WhatsApp. People have not heard you. Can you just explain it to us again? I think I have heard you, but people have not heard you, Prashant. Uh, that's a very simple concept, but people are not able to hear you.
Okay. So good evening, everyone. Can you hear me now?
Yeah.
Okay.
Loud and clear. Yeah.
I was not talking, and why I was not talking is the main reason before we start the session. So what happens is just 2 minutes of your time before we get into the technicals. What happens is we have been brought up and we have been brought up in a structured way. There's a structured life we live. Like we go to the school, we know we're going to go to the college, then we are going to pass out, we may do our further education, we're going to get married, we're going to have a job, we're going to get married, we're going to have kids. That's how we have structured our life. We know what's going to happen tomorrow. That's how we plan. But life is full of uncertainties. Now today, when you came to the session, you knew that I'm going to start talking, I'm going to explain about this. And when you did not hear me, you would have been in a little bit of discomfort. That discomfort is what brings out growth. Okay. When you start getting comfortable in something, that's when you stop growing. You might be making money, but you stop growing for sure because you're not learning, you're not growing. When you start getting discomfort or non-comfortable, you're not comfortable with the environment, that's when you are learning because that's when we try to get that comfort back, which is when we try to grow, we try to adjust with the environment. So that is the first lesson I want to give you with regards to a stock market. The only certain thing in a stock market, which you should know will happen tomorrow, day after tomorrow, 10 years from now, is it's not certain. But when you have the knowledge of technical systems, you can align to that uncertainty. That's where the big money is made. Why? Because not many are able to do that. For example, today, if you see, any and everyone is going out and buying. If you look at someone like the Burger King IPO which we had, everyone was pumping in money into that without knowing what it is. I did not because I don't invest. I don't invest in things I don't know. I only invest when I see that it's giving me an entry on the chart. Now, I believe most of you have gone through the technical analysis, and I hope you are now very much energetic after the initial shock of not having heard what I was talking. So we'll now just quickly revise about what is the magical line, and then we'll start with the next concept where we'll go one level up today. Okay, is that fine? Can you all confirm on the chat, please? Dr. Ankit, can you confirm that, please?
Yes, we can hear you, Prashant.
Okay, all right. So now we spoke about magical line, which was nothing but the 20-day moving average, right? It was just a 20-day moving average, simple moving average, which we use like we have been using from our school days, basic statistics, just sum of all the numbers divided by the total number of numbers. Now, what happens is moving averages, you consider the latest data. So when I say 20-day moving average, it's an average of closing prices of the latest 20 days. So when I talk today, it's from today to the previous 20th. When I go tomorrow, the one which is the last will be removed and you'll consider the latest 20th. So how to use that? Very simple. We go to something called as investing.com. Now let me start from the beginning. Investing will look like this. I think some of you have not been able to go through the free program because of whatever, you might be busy or something. But as I told you, learn to get uncomfortable. That's where growth lies. It's about exploring new avenues. We don't know what 2021 has in store for us, whether it is a vaccine or one more year of lockdown. We don't know that. Okay, so let's ensure that we have something we search which will take us to the next level. Now, suppose I want to look at a stock. So we'll type the name of the stock, say Reliance Industries, and I'll select that, which is on NSE, that's National Stock Exchange. And I'll click on chart. Absolutely simple. Now, after this, what I do is once the chart opens, I'll just click on zooming out, that is this button. And what I do is I remove everything else and I go to this format. And to make it more visible and clearer, what I do is I select a slightly brighter color. I increase the thickness. I remove the entire field by selecting white color. And I remove the, white color. And I remove the price line. Now this is the chart which we spoke about last time. Closing prices spotted on days, right? If you see here, right? If you see here, you will see 15th of October and C is the closing price. When the closing prices are joined, you come to understand that it's a, now if you have gone through my program, you have realized about trends, which is higher bottom, higher top, higher bottom is an uptrend, lower top, lower bottom is a downtrend. So here itself, by visual inspection, you would have realized that Reliance continuously was making higher tops, higher bottoms. These are tops, these are bottoms, higher tops, higher bottoms. Somewhere here it went sideways. Again, it made higher top. This is where it made a lower top and then it made a lower bottom. So here itself, Reliance gave an indication it's time to exit. But suppose I don't understand higher top, higher bottom. I don't understand anything. I want to simplify it. So I want to add some indicator. So what I do is I go to this button, which is indicators. I click on that and I type MA, which is moving average. I click on that. Then again, I get a MA. By default, it is some 9. I go to the format and I change the period to 20, right? So this is 20. Then I go to style. I select some other color and that is my setup. Okay. So now, if you see now, this is just an example. I just opened it randomly. So here itself, Reliance said time to exit, right? Somewhere around 2200. And if you don't known this, suppose for example, I have say 200 shares of Reliance, normal. Okay. And I understand that my system is telling me after I come back home in the evening for my busy day at work, that tomorrow exit at 2200. And I exit. And from 2200, if it goes back to 1800, even that amount of money that I have saved, say 80,000, it's profit for me, right? I can always buy it back. Now, this is basic that we are seeing. There would be other systems advanced, obviously, which will help you to catch somewhere here as well. But let us now stick to this. Now, what is Reliance doing? It has come again here and it is almost taking a dip there. So if it does something like this, which means if this is my, say this is my, so this is my moving average, okay? And I see that Reliance has come here and say tomorrow it does this, which means today's closing price was this, tomorrow's is this. I come home and check this. So I know that Reliance has bounced here. So my magic line is working. That is where I'll buy. Okay. today we'll talk about how much we'll buy. If you've gone through the program, you would have understood about risk management as well. Today we'll talk more about that, and I'll take you to one level up, which is the candlestick chart. Okay, so that is what we are going to use as a basic system, which is the magic line 20 moving average on the daily time frame. That is a daily chart. Now, so I'm looking at a few stocks. I think I had told you about in the last session. I had spoken about this one, that is Neuron Labs. Okay, um, this has picked up well. Then we spoke about, I think, this one, Lotus Labs. This also took off nicely. And now what I'm looking at is a stock called Federal Bank. Okay, just check that it has closed above the magical line. So I'm looking at this stock. Okay, anyways, let's not get into which stocks and all. We'll talk about at the end of the session. Let's first learn. And I don't like to give you the catch. It's better if you learn how to catch, right? So this is one stock I'm looking at. Now let us talk about some of the examples which we had in the program, which is stocks like Yes Bank, or maybe even let's look at the same TCS. So if you see this, right, just before, so this is what time? Check this time. This is Feb. So people say the crash was in March, but even this absolutely basic system told us it's time to exit in Feb itself, and that's when it crashed. Now that is what I've been telling, that now the people who are a part of my program, sometimes they're very busy with your day-to-day job. So when they are, most of them are doctors, surgeons, some of them are advocates and IT, all of them are busy throughout the day. So what I, if they are on my group, I ping them, they understand that this is picked up and they are able to do it. Or even if you know something as basic as this, and you come home and check that I have saved 1000 TCS with me, it is telling me it's time to exit, I can always exit. This kind of a scenario, if you save your money, you can always reinvest and buy more of the same stock. That itself is the value of knowledge, and that is how we need to be ready to see. What I believe in is every penny that I invest, I should know where it's going. Very simple, right? So now, if you see a few days ago, exactly what we are seeing on Reliance now, this is what TCS did at that time. It came here, gave this tick mark somewhere here, and from there, that is say 2700, it just picked up like there is no tomorrow, and it's just going one way. Did the system give an entry? Yes, it did. Were we able to catch it? We will be when we know the system. Is that fine for all? Can you just comment so that we move ahead? Dr. Ankit, can you confirm, please? Based
Yes,
on the
yeah, Prashant.
yeah.
Go on. Yeah.
Okay. So now today we'll take it one level up, where we'll try to look at something called as candlesticks. Now, what, as I told you right at the beginning, people feel that I don't know candlesticks. This is not for me. I can't do this because I'm busy for the whole day. So let me teach you candlesticks in 10 minutes. In fact, 10 minutes is also more. And let me tell you what is a candlestick. So I told you last time itself that the four things which we get from the market raw are the prices, which are open, high, low, and close. So opening is 9:15, high is the high made in the day, low is the low made in the day, closing is 3:30, right? So suppose I get that the opening price of the stock, say, is 100, okay, and it makes a high of say 140, it makes a low of say 80, and say the closing price is 120. So what I have done is I have drawn horizontals for the opening price, closing price. I join them, okay, and the high made in the day, the low made in the day is a line. Simple. Open, close, high made in the day, low made in the day, and I join the open and close by kind of a rectangle, and this is called as a candlestick. Okay, this is a candlestick. Now, how do you define the color of a candlestick? Just remember this: if the closing price of that session is above the opening price, the color of the candle is green. Very simple. Closing price above the opening price, color is green. So 120 is above 100. So color of this candle will be green. Now this part is called as the body of the candle, and this part are called the shadows. So upper shadow, lower shadow. Now let us try to draw both red and green candles side by side. And as I always say that, let's try to get into the emotions of the candle. It's always about capturing the emotions so that you are able to trade and take advantage of that and have that trading edge. There's a word called as trading edge, which means your the system which gives you that edge, or that small advantage, or the others who are trying to invest or exit from that stock, you'll have the right knowledge about it. So let's consider two examples. Okay, first one, opened at 100, exactly what we were looking at, closed at 120, made a high of 140, made a low of 80. Second example, it opened at 100, made a high of 120, low of 60, closed at 80. So again, I joined the same way. Now we don't have to do all this. It is done by the software. Just understand this. So here, closing, opening, opening, closing. So in this case, the closing is above the opening. So what did we say? Color of the candle will be green. Now here, the closing is below the opening. So what will be the color of the candle? Red. That is candlesticks for you, simplified in 2 minutes. Green candle, it only means that the session, the closing price was above the buying price, and red candle means the closing price was below the opening price. Where people go wrong is, if they look at a green candle, they say, oh, you know what, it's green today, the price is above yesterday. It's not that. For example, I may have a scenario like this, which means I say my yesterday's price was like somewhere like this. Say this was Reliance, maybe opened at 2000 and closed at 2050. Okay, whatever was the high and low, that's okay. And today, say it has opened for some reason at 1900, right, which is gap down, and closed at 1950, high and low. So the price today is lower than yesterday. But what happened today is the closing price is above the opening price. So even the color of this candle will be green. So never get confused by looking at a green candle that the price has gone above yesterday. It's not that. It just means that today's closing is above today's opening. That's it. Similarly, we may have a scenario where it was like, say this, and tomorrow what happens is it opens at 2040, closes at 2000, and the high and low, that's why the color may be green. But today's closing and tomorrow's closing is up, still the color is red. Why? Red only implies that the closing price for today's session is below today's opening price. Is this much clear to everyone? Can you please comment and confirm? This is the heart of candlesticks, simplified in 5 minutes. Dr. Ankit, can you please check the comments and confirm? Is it fine for all?
Yeah, I'm checking. I think there's a lag of 10 seconds. That is the reason the comments are
Okay,
coming
okay,
slow. Yeah.
okay.
We'll wait for the comments. So this much is clear, Prashant. I think we can go on to the next thing. Yeah.
Okay. Now we'll talk about something called as risk management. Okay, and club it with candles. So based on what we learned in a basic way, we saw that. Let us again go back to the chart. Okay, and we were looking at, say, let us take this example itself, which was TCS. Okay, this was our example. This is where it had taken a dip. Okay, which is 27th of November. So let me go to candlesticks chart now. This is that candle, this one. Okay, now what I need to do is, as soon as I get a green candle here, okay, I need to buy on that candle, which means today I come back home and I see there's a green candle, then I should know that I have to buy at the high of this candle. That's it. So when you see a green candle, who is controlling that candle? The bulls. That means the buyers. So all I need to do is I have to buy when the price goes to the high of that candle tomorrow or day after tomorrow, any day. Now, how much should I buy? So let us look at here high and low. So the high of the candle, that is H, is 2735 and the low is 2624. Okay, so 2735 and 26, I think it was 3, say 35 itself. So 100 rupees, this minus this, is my risk per share. Now suppose I am okay to take a risk of 5,000 for investing in TCS. So my total risk is 5,000 and my risk per share is 100. I will take 50 shares of TCS here on this system. So that's how I define my quantity based on the risk I am going to take. Okay, it's never on the basis of target. Someone might say it's going to 3,000. Do I know it's going to go? It might go down. For me, I know that when I'm entering here, my exit point is 2635, little below that, right? Which is say 2600. So based on that, when I know my exit point, I'll plan my quantity on my exit point. For any business or anything in the world, what is important is the exit point. So once you know the exit point, one factor goes out, one emotion, which is what? Fear. Because even if it goes down, I know that the maximum risk I've taken for this particular trade is 5,000 rupees. It can be 2,000, it can be 10,000 based on my risk appetite. But my quantity would be defined by my risk taking ability, right? And for that also there are rules. As of now, let's just keep it basic. Say we want to take a risk of 5,000 per trade. So that is the risk I'm going to take. Okay. Based on that, I'll plan my quantity. So that is about a candlestick. And let's try to look at how the candles look like. Okay, so if you see this, just check. Whenever there are big green candles, okay, that is where the bulls are in total control of those sessions. And whenever there are big red candles, that means there is selling, simply because when will the closing go below the opening? When there is selling. And when will the closing go below above the opening? When there is buying. So absolutely basic. So green candles are controlled by the bulls, red candles are controlled by the bears. Now if I see a candle like this, okay, what does it imply? Just check this. And now let us try to understand the emotions. Okay, before that, just look at the open high low close here when I keep the cursor. So it opened at 2,800. The low made in the day was also 2,800. That means right from the opening there was no selling. What was the high made in the day? 2,885. Did it close there? It did not. Where did it close? It closed at 2,825. That means it closed 60 rupees down. Why did it go down? Because there was selling there. So who was active there? The bears were active there. And what formed there? Upper shadow was formed. So that means for a candlestick, the big upper shadows indicate presence of bears. So even if the color is green and we see a big upper shadow, we will stay away from that candle because we know that it is controlled by the bears. So whenever we see a nice big green candle with not a big upper shadow, that's when we know that we are going to buy here. Okay. Now, similarly, if I want to understand the emotion of a lower shadow, let us look at this candle. So again, we check here. The opening is 2679. What's the low made in the day? It's 2624. But did it close at 2624? It went 100 rupees up and it closed at 2726. So what happened there when it started going down? It was going down, but there was buying there. The bulls started entering. That's where they started taking the price up, and that's how they managed to close higher. So the lower shadow indicates buying. So whenever you see a candle with a big lower shadow, you should know it is controlled by the bulls. So if you just see this example, the color is red, but it has a big lower shadow. So that means there was selling, but the bull stepped in. And if you see what happened later on, it just took the price one-sided up. That's why now this is absolute basics about our candlesticks. I'm just trying to explain the emotions. Okay. I hope you're understanding it well. And now what we are going to do is based on this and based on what we have learned till now, we will define how we will enter. So what we saw here, now there are types of trading. What are they? One is intraday, which I personally don't do because I feel it's more like doing a job. Okay, if one has to do intraday, it has to be in a segment called as options. Why? Because in options now, Dr. Ankit himself has been a part of my programs almost every week or at least every alternate week. We have heard and read about a lot of articles where a particular investment grows 10 times, 5 times in 5 years, 4 years, 10 years. But we have seen in the past year, in fact, regularly in my entire experience, at least once in 2 weeks, mostly once in a week, but let's say once in 2 weeks, you will see options moving from as much as say 20 to 40 rupees to something like 400, 500 rupees in 1 hour. Okay, so when I do intraday, I do in this. Okay, we're not covering options here. However, options have that strong, what you call as uh, uh, huge multiplying capacity wherein your investment can go multi-fold in no time, provided you have the right knowledge. Okay, what people do is they try to trade options like a jackpot, which doesn't work. There is a science, there is a logic to that, which is different, but that's where I do intraday. Now what's a different way of trading, which is my favorite, is called as swing trading. So what is swing trading is when you buy a particular stock, you hold it for more than a day, say 4 days, 5 days. As per a textbook, it say 10 days to 5 days. But I would say somewhere between 1 to 2 weeks is okay to call it as swing trading, which is the best way, which means I enter here and I try to book profit somewhere once it gives me a specific move. How? We'll see that later on today. But that is what is called as swing trading, which is one of my favorite ways to trade. Enter, exit. Then comes positional. What that means is it can go from a few weeks to few months. That is positional. Okay, which is what we saw based on this, right? If one would have entered here and you're going to hold it, keeping your exit point below this regularly, that is what you called as a positional trading. Basic. There are other ways, but this is in a basic layman's language for all of you. So then comes something called as investment. Now what is an investment is it goes on for years. Now here is where most of the people get trapped. Why? Because they feel that then they start trying to find something called as jazzy terms like value investing and all that, which according to my 18 years of experience, right from my investment banking till as a full-time trader, I have seen that only thing which I have heard about is when the markets are strongly up like now, people will even forget about now in November, October and September when the price started coming down. Nifty was 11,000. They were saying it's going to go down. That's when I had posted on my live forums. I am looking at something like 12,800 and people laughed. Okay, because nobody felt we'll go to a new high at any cost. It was a strongly uh, event filled year, not so good events. People were looking at a second wave and all that. So that's why everyone laughed it off. But we hit 12,800 in November and we made an all time high. We are now almost hitting 14,000, right? So that's how your technical knowledge will help you. But there, when a price starts crashing, even in the month of Feb, there was an indication as we saw even on a basic system. So when you master this art, you'll be able to manage your portfolio first thing. Secondly, you'll be able to align your mutual fund investments also by looking at their fact sheets. For example, if I see that they are not investing in good stocks based on my knowledge, I'll simply move to something else, right? That is one thing. Third, and the most important, if I have a big investment portfolio, okay, into lakhs and crores, which most of us do have, then if I get one right indication, okay, which I see coming soon, not in the next 2 days for sure, it might be strongly bullish. Because if you remember, I think on the last session itself I gave a target for bank nifty of 32,140, which might be hit in 2 days itself. So after that, there would be an indication somewhere on the systems to exit. So even if with my knowledge I'm able to catch that, what I have seen is even a portfolio of a basic say 5-10 lakhs is able to save 2-3 lakhs just by exiting and reinvesting the same stocks using the systems. That itself is good value for knowledge according to me, right? So these are the types of trading: intraday, swing, positional, investment. So what we are going to talk, or what we are talking now, is more of swing and positional. Okay, now till now we saw that we are going to use the daily time frame. So this is what we call as swing trading. Now we move one level up, where we go to, just see what I did. I clicked here and I went to the weekly time frame. That's it. I went to the weekly time frame, keeping the same setup. Now this is positional strategy, basic positional strategy. So what we do is the same moving average, that is 20 moving average, I applied to the weekly chart. Now what would be a weekly chart? Just try to align to the basics that we did now. You will have the opening price, closing price, high, low. What would be the opening price? The Monday 9:15 a.m. price, closing price Friday 3:30 p.m. price, the high made in the week, the low made in the week. So 5 days of trading is shown as one weekly candle. This weekly time frame, okay, which is higher than the daily time frame. So remember a rule, okay, you all can write it. That is something that I always talk about: higher time frame rules. So your weekly time frame will always pull the daily time frame in that direction. Okay, now these are the only two time frames we are going to use for now, basic. Now if you look at this, where TCS gave an entry, same thing, is somewhere around 1980. Okay, and it just kept on moving. Now where would one exit? So let's talk about this concept now. I hope what we are talking about is making sense. You're finding it interesting. Just comment now.
Just on the example, just show them where do you enter and what stop loss you put in the beginning.
Yeah.
Right.
So now here, when I see that, just check this. Okay, this is where I have the dip. So check the high and low here. So what is the high? 2024. What is the low? 1925. So it's like a 100-point risk. Again, if I want to take a risk of 10,000, 100 per share, 10,000 by 100, I'll buy 100 shares of TCS. And what I'll do now is the next concept: where to exit. My entry is clear. It dips here. I see I put the cursor here. I check the high, I check the low. That's the total risk per share, per trade. And where am I going to buy? So I'm going to buy above the high, right? So even if I don't see a candle, I just check this. Here itself, I see the high and low. So I'll buy whenever I see the price is crossing the high made here. That is 2024. Whenever the price goes to 2025, 30, whatever, I'll buy there. And I know that my exit point is 1925. So say slightly below that, say 1920, 1915, or slightly below 1900, 1895. Based on that, I plan my quantity. Now what happens to this 20 moving average, or the magic line, is this magic line is a magnet. What do you mean by a magnet? It attracts the price to itself. Okay, it will attract the price to itself. So you will see that typically, check this, whenever the price goes away, it always comes back. Whenever it goes away, it again comes back. When it goes away, again it comes back. So how will I exit, right? So if I'm doing swing trading, okay, if I am doing swing trading and say I have entered here, what should be my target? So I should just see to my left, and I should see what, from where did the price turn last time. When it approaches there, okay, I should try to book my profit logically. That is my one way to exit. Let me repeat again. When I'm buying here, I should see to my left and up, left and up. Whenever the price has turned, that's where I should try to book my profit and exit of at least 60% of the quantity, which means if I had bought 100 shares, okay, if I had bought 100 shares, I should at least exit 60, book my profit. What should I do to the balance 40? If I bought it at, say, what was the price? 2600, I will bring my exit point of those stocks to at least 2650. So I know that my investment is safe now, right? That is how I'm going to trade. So I booked out 60%, and from a swing trading perspective, 40% I am holding. Why? Because I'm giving the price a chance to move out of this zone. If it does, then what I'll do is I'll keep my plan my exit point just below this. Okay. So what I've done is, this is a process called as trailing. What do you mean by trailing? I'm following the price closely instead of booking out. I booked out a part, so my investment is safe. Already I'm in profit, and I'm giving it a chance to go up. If it goes up, good. Or else what I'm doing already is, I am already putting my exit point daily below this. So from here, already I was somewhere here, right? So if the price goes through this, what I do is, I know at some point of time the magic line as a magnet is going to attract that price back. So I'll keep my exit point somewhere below this turning point, say here, and when it exits, I'll take my profit. Next time it comes here, now here I made a profit. Say my initial risk was 10,000. I made a profit of from 20, 30,000. Next time on the same stock, I'll take a risk of that profit, that is 30,000 plus 10,000 more, and buy more quantity. That's how I start building my portfolio using money from the market. Or else what people do is, they start pumping in new money. That's not the way. So typically what I do is, I trade my option strategies, make big money, I put it in portfolio, so I'm not bothered, because that is market's money, right? And again, it doesn't mean I just keep it. I know if something is happening, I get an indication, I straight exit everything, long term, short term, everything, SIPs, all redeemed, right? The way we did in Feb. Now no one knew it would crash that much. Also, we did not enter again in April. But because nobody can pick the bottom. But somewhere around May, mid, we started seeing that the stocks are now doing something else. And that's when we started again building the portfolio. So that itself was a huge saving. And then we exited somewhere in November, most of it. We are holding very small quantity now, and we are looking out for something else. Now, what that something else is, I'll talk about at the end of the session. So again, the rule to book out, first thing when we enter, our first target is where the price has turned left and up, right? Not nearby, the farthest one. Okay. Now here I straight away book out 60%, and I keep my stop loss trailing just below the magic line. This is from a swing perspective. Now let's talk about positional perspective. One important thing here, when I talk weekly, I also tell you why I'm talking about this point. Do not go to monthly considering that it is higher time frame, that weekly it will be more stronger. It cannot be traded as the monthly chart can't be traded. So when I talk about the time frames, understand one thing. One is, I've spent lakhs of rupees to learn it over the past few years. I also paid lakhs of rupees to the market. Why? Because we come from a science background as engineers and doctors. So first thing we do is, we try to challenge the facts. Why this? Why not that? That's what I did. Okay. And that's where the market shows us that we don't need your intelligence. We just need a system here. And that's when we mellow down. And that's what I said last time. We see trading as spirituality, and that's when it starts rewarding us. So when I say weekly, stick to this. When I say daily, stick to it. Do not change it. Don't try to take it into the lab, because it's not going to help. It has not helped me. It has not helped anyone. Okay. So now that I am telling you, it's from my experience of learning as well as paying to the market also. Now here, if I would have entered, how would I trade it? Just check when I'm entering here, what is my previous level where the price turned? It was here, right? So somewhere here, I would have exited 60% of my quantity, right? And my balance quantity from a positional perspective would have been slightly below this, right? Now, since the price had gone above, what I would do is, wherever I am happy with the profit, I book my profit and exit, and wait for it again to dip down to this magical line, and give me an entry like this. Very simple. 60% book out, where you see the price turning to the left and up, right? 60% booked out, 40% we are holding with the exit point below this. And if it manages to go through, now we should just book out wherever we are happy with the profit, or we are already in profit in the first 60%. Even this is in profit. So we continue to move our stop loss as a trailing based on this magic line on the weekly time frame, because it is positional. So we are okay, right? So that's how we are going to trade it. And same thing, if you look at the candles, whenever you see this kind of a big green candle closing above, that's how we'll plan the trade. So high is 2032, low is 1872. So around 160 is the risk per trade. So according to that, if I want to risk 5,000, I buy 30 shares of TCS and I hold it. So this weekly time frame is your positional trading strategy, and the daily time frame is our swing trading strategy. Is that fine for all till now?
Yeah, Prashant, this is clear, but just show us one stock where it has gone below the 20 moving average so that we know how do we exit. Some stock like Yes Bank, which
Yeah,
has
okay. Yeah,
fallen a
okay,
lot.
fine. There would be a lot of them. Let's see them. So this is the weekly time frame. Now let's check this. Okay. So this is what? This is 2018. Okay. Now suppose this was your investment, right? And we did the same thing. That is, we entered when it closed above, right? Now when we are entering here, what is our first target? Somewhere here, right? Because this is about 20 moving average and this is where the price turned. So I'm entering here, I'm going to hold for this, right? When it reaches here, understand this, that is when I buy at this price, I'm going to hold for this. When it reaches here, I book out 60% and I hold a balance with my stop loss, that is the exit point below this line. This is an exit. Now if the stock is fine, it's not going to do anything like Yes Bank, it will give us a next entry. So when I see this entry, I again re-enter using my risk as well as the profit I made in the previous investment. Now when I enter here, my exit point is here because the price turned here for 60%. The rest I managed to hold. Now either I book out here or I manage to book out when it closes below this. Another entry. Now check here, when it gave the exit, it just crashed from somewhere like this all the way down. Okay, now what we are looking here is on the New York Stock Exchange. So what we see on National Stock Exchange also works on New York Stock Exchange, will work on London Stock Exchange, will work everywhere. Let us just check the same thing, how it turned out to be on our NSE, right? Check this, absolutely same, right? So when we are buying here, that is 86 rupees, our first target is 242, this 220, this one, right? Check this, right side, y-axis price, x-axis time. So when you're buying at 82, our first target is 220, that itself is triple. And when it closes below, we exit 40%. That's how you build your portfolio. And then using the money we have made, and so this is basic. When we learn more, obviously you get better strategies where options, futures all combined, you make more and then you start building your portfolio. That's the way to do it, not pumping in money every time. Okay, now again, if you see here, now when we bought here, this is where the price had turned. So your first exit point, so 60% was this. Now when it's going up, you see there was one more point where the price turned. So here, ideally, one should have booked out the balance over and out. Why? Because now I'm happy with the profit. I entered at 120, it's gone to 160. That's like 120 and 30. That's like a 25% profit. I'm more than happy, right? So that's how one should be investing logically. Okay. And remember, this 20 moving average is a magnet. It will always attract the prices. So when they go far up, that's when people feel it's going to infinity. It will attract. If it breaks this, that means there is a problem like this. If it breaks, there is an exit. Do not enter that stock. Okay. For any reason, you might convince to yourself, you might be stuck, and you might feel, now the terms like value investing, long term. So whenever you hear that's my long term, 99.99967, that is Six Sigma level of my experience says it's a loss making investment. Okay, So remember that there is no long term. It's always entry, exit, entry, exit. It can be in days, hours, weeks, or months. That is okay. But there are always entries and exits. Now, you might have heard about stories about stocks like Reliance, L&T being passed away from generations to generations. That's okay. But even there, imagine if you have something like a 5,000 quantity of Reliance with you, and you are able to exit once using a strategy like this at somewhere like 2,200, and it comes to 1,000. Okay, so this I'll share in the last webinar what are my targets, but that's the next Tuesday. But if it comes there, am I not saving money? Now that money itself I can pump in to buy more Reliance when the system gives me an entry. That is logical way of making your money work for you when you're doing your work. Exactly what I spoke last time, the difference between being rich and being wealthy, where your money grows without you focusing on that. Okay, so this is the heart of swing and positional trading which we have done till now. We have also seen candlesticks. And what I'll do next time is I'll try to, so 2021 starts in the next session. It's going to be a new year. We all are full of questions. We don't know what lies ahead. At the same time, what we know is, just like we saw in the last lockdown, one industry which will not shut down is the stock market. So how we can do most from that, how we can gain more from that in 2021 and every year from now, is what we'll see there. So what I will do is I'll share a very strong strategy. Simple. My all my strategies are simple. So people say that when you join Yes I Can Trade, go to Seven Wonders, Pro Trader options is difficult, but the level of complexity goes easier. Your emotion management is what comes into picture. Okay, so that's a different topic altogether. Now next time what we'll do is we'll talk about one indicator which will completely shock you and show you how easy it is. And Dr. Ankit, before that, can we take some questions?
Yes, Prashant, sure. We have some questions here.
Yeah.
So Dr. Vineet Gupta is complimenting you that it's the first time he got to understand what is a candle and how it is formed.
Thanks a lot.
Yeah. So Dr. Chintan Vyas is writing, shadow or wick is important in candlestick. Emotion says that there is pressure on that side, so it will be difficult to go beyond it. You can say it's a resistance area.
Let me talk about that. Okay. Let me try to make it very simple for you. Or rather, I'll give you one example. Okay, let's do that. So we have some time, right, Dr. Ankit?
Yes, Prashant, go on.
Okay. So let me give you a beautiful example. Now, if I ask you again, let's not. Now, what happens is people talk about a lot of names of candlesticks, three black crows, three white shoulders, and all those things. I don't understand that. What I understand is what are the emotions in that candle. You just catch them, you are able to trade them easily. Knowing now, again, going back to the background, I also started that same way. Same engineering background, science background, always ready to learn more, always ready to get more knowledge. So that's where I also wanted to learn all those patterns, and that's when I realized that it's not needed. All I need to understand is the emotion behind that candle, and I can easily trade that. So any candle can be traded understanding this basic. Say for example, if I see that price had opened here, let's take some random prices, say 500. Okay, it goes to 550, it goes to 450, and say it closes at 505 or say 510. Okay, so will I get a shape like this on the candle? So this would be green color because it has closed above. It made a high of 550. Why did it not sustain here? Okay, so if you have gone through my free program, all of you, you would have seen that I have spoken about one thing. The stock market is nothing but the fight between bulls and bears to capture territory. Any war is about what? Capturing the territory. So it's about that. So what is happening here? The bulls are trying to capture this. The bears are not willing to give up. So they put in a fight. They come in huge numbers and they start selling. They take the price down. Now this is the bulls territory. So they are not willing to hold it here. So they start buying. They take the price here. Nobody is able to make a decision. The fight continues and the session closes here. So what is the emotion here? The upper shadow. It's selling. What is the emotion here? It's buying. Who is in control here? The bears. Who is in control here? The bulls. Now, if I get this pattern and at any point of time, if the price trades below this, I know that which army has failed, which army has lost. Very simple. The bulls have lost. So what should I do? Exit. And if the price goes above this, which army has lost? The bear army has lost. So what should I do? Buy. Simple. So if I see upper shadow, it indicates bears. When the price goes above, that's why I said when you see a green candle, you should enter when the price goes above that high. Because when it's going above that upper shadow, the bear army is killed and we are going ahead with the bull army. We don't know who is that, whether it's an FII, DI, who, we don't know. We are just following them. How we are following them? Based on the price, right? It is as simple as that. So I hope that answers your question. That when you, for example, if you look at this, okay, so this was Bank Nifty crazy year last year, 2019, and this was the pattern which was formed. Take this: opened, made a high, made a low, went nowhere. What happened on the next day itself on open? The price made a statement that the bulls are out. So no need to even wait for the price to close below 20 moving average. Straight out. Okay. Now Bank Nifty out means what? Out of HDFC Bank, out of ICICI Bank, out of Kotak, out of IndusInd. So if I know what's happening on the index, I can always align my strategy to that. That is the first thing. Okay. You will find this everywhere before a major trend starts. Okay. For example, any random stock you see, even if you see, say, let's look at Infosys. So you will see these kind of, check this. Okay, when the price came to the magic line, that is 20 moving average, opened here, the bears tried to take it down, did not close. The bulls came in, tried to take it up, did not close. Again, the bears came in, session went nowhere. What happened on the next day itself? The price crossed the high, which means which army was out? The bear army was out. So we enter, and that's how the move from here to here. This is 630 to 720. That's like a 17% move in 5-7 days. We wait for the whole year to get 7-8% on, not 7-8 also. Now 5.5% TDS nikal ke on your FDs. So if you get 10-15% in a swing trade, more than happy. I am more than happy, right? So again, if you check these examples, the system always gives an exit before actual news comes out and there is a crash or there is a rally. Okay. So Dr. Ankit, what's the next one?
Yeah, it's again from Dr. Chintan. He's asking with moving average as a strategy, is the direction of the line important? Like if the direction of the line is downtrended and it pierces on
It
the
does not
upside.
matter. So I got a question. Sorry.
Yeah.
It does not matter. It is basic, right? Now understand one thing. The line is not taking the price up. Okay. It's vice versa. The price is derived, the line is derived from the price. The moving average is derived from the price. So when the price goes up, what is the line? The average of latest 20 days or 20 weeks. So when the trend is up, your latest 20 days will always be more than the past ones. So your line is anyways going to go up. Whereas if it's a downtrend, that means your latest 20 days, the average will be lower than the past ones. So the line is always going to slope down. So it does not matter. That's why what we are doing is when we are investing, I told you that 60% we book out near this. What we do with the rest is we keep moving our exit point below this. The line itself is going up. So we are going with the trend. And if you are happy, 30, 35, 40%, we just book out or else we keep on holding. But important is if the price goes and closes below this line, we respect the line and we exit. Right? Yeah, Dr. Ankit. Next one, please.
This one is from Dr. Hetal Vadera. He's asking, has technicals failed you ever?
Many times, but it has failed me in a logical way, which means I knew my exit point. So I knew that I'm going to exit here and I knew my risk and I could take that stop loss because I had already decided that this is my exit point. I'm okay to take this risk. For example, when I stepped out of my engineering, I always initially as a mechanical engineer wanted to have a manufacturing setup, making some huge machines, gears, some air conditioners for maybe some fluid machinery for something supplying to a Ferrari, all those dreams. Now that would have been buying land, labor, electricity, all those things, huge investments, taking a loan based on what? Based on my dream, my ambition, and my belief in my knowledge, which is what we do, everyone, whether we are doing in whichever field, that is what we do. Here, what is the risk? A laptop which we already have, internet connection which we all have, a capital which I decide. For example, I might decide 10,000, I might decide 10 lakhs, I might decide 50 lakhs. But that's what I've defined. I'm okay to take this risk for my business. Now, in that, do I spend 50 lakhs in one trade? I don't. How much do I spend on one trade? 10,000. So if I get exit in that, I know that my exit point is 10,000 rupees. So I'm more than happy to take that loss.
Yeah, Prashant. I think most people are of the mindset that once you invest, like you have to hold on forever. So getting out of the stocks is not what is there in everyone's system. Like that is what people find it difficult to do. So thanks for clearing that.
Yeah.
We go on to the next question. Dr. Ethan is writing, I like the concept of partial profit booking for a long-term investor. I think
Yes.
that's what we discussed. And people don't tend to book profits.
Yes.
That is very important.
Yeah, at least try to book 50% of what you have, so that you know that the balance you can hold on a weekly time frame also does not matter.
Yeah. So we go on to the next question. It's coming from Dr. Abhay Rana. He's asking, is Heiken candle better than normal candlestick as it has lower noise?
So there's a concept called as noiseless charge. So you have Hakinashi, point and figure, Renko, everything. It is again very basic. It does not matter what it is. I mean, it does not matter which kind of chart we are applying or which kind of strategy. So if you talk about one of my programs, which has been going widely doing the rounds now, which is called as Seven Wonders of Trading. So how I have named it is based on your seven wonders of the world. I have called it as seven wonders of trading. And how I have made it is totally for people who have a lot of technical knowledge, also for people who do not know even what is a share. So that's how I made it. Now there are seven strategies. In that, one of them is one of the noiseless charts. So you can always learn everything and apply. Now, for example, if I see that, say let's take an example. I see that maybe JSW Steel is working very well on a noiseless chart. So, and I am already into it based on my positional weekly 20 moving average. And I also want to take more of it based on this strategy. So, what I do is I also wait for another entry on the noiseless chart. I enter some more quantity. For me, what it happens is it's just another entry in my business journal that I have 100 shares on my weekly positional. I have 100 shares on this noiseless chart for a swing trade. As simple as that. And I can carry it. So, the rule is my reason to enter a trade has to be my reason to exit. So if it's this 20 moving average on the weekly chart or daily chart, my exit point has to be that. And in the meanwhile, what we just add is booking partial profit where the price has turned previously, so that we respect that zone. That's it.
Yeah. Moving on to the next question, Prashant. It's coming from Dr. Dhairya. He says closing price below moving average line or days low also indication to sell.
No, days low is not an indication to sell. It is always below. So here again, the same line, reason to enter should be the reason to exit. So when I have seen that I have entered on say 20 moving average, then I will not exit for any other reason. It has closed below days low now. It's okay. I am going to first exit near my target, or if it closes below this line.
Yeah, Prashant. So we are done with the questions. You had something to add, right? You said
Yeah.
you will be covering that after the
Yeah.
session.
So normally what happens is we talk about a stock market where we buy here and we sell. It cannot be sold here for sure, but we sell somewhere here or we sell somewhere here. So that's what we look at. But the big money which I spoke about options, or where is the big money made is, let me show you. The big money in the stock market is made here. which is in a downtrend, 110%. Okay. Now that requires additional knowledge, which we'll go through later on. Now, what I will do next time is, in the next last session, I will talk about one very strong indicator which most of you would not have heard. We'll club it with our moving average knowledge and candlestick knowledge and try to make a foolproof system on that. Okay, so that even people who know even this much, they will be able to sustain. Okay, at the same time, what I'll do is, in the next program, it's the start of 2021. So I'll talk about my program, 7 Wonders of Trading, which I'll give Dr. Ankit the details of the program. And specific to this group, since we have done 3 sessions, I'll come out with some good offer at the end of the third session after all the teaching is done. And those who are keen on taking it to the next level, being with me on the WhatsApp groups and talking about the trades, the entries, exits, and all, we can do that. But so next week, Tuesday, we'll do it. And we'll start with this new indicator clubbed with this knowledge, and then we talk about 7 wonders. So Dr. Ankit, I would need your help. What we'll do is, I'll give you information about 7 wonders of trading. You can post it on the forum so that people can go through it.
Yeah, sure, Prashant. I'll do that.
Okay.
I'll do that. Yeah.
Yeah, so and we'll meet next Tuesday. And
Yeah.
for sure, I'll not start with the muted mic. I'll straight away talk normally. I just wanted to get you acquainted with the unstructured market around us, and also let you know that this unstructured way itself has the best potential to give us exponential returns, provided we structure ourselves to a system and get disciplined with it. So I hope you all found value in this. Those who are not gone to the free program, please do it. It will help you for sure. And we meet again on next Tuesday. Is that fine, Dr. Ankit? Any other
Yeah,
pending
yeah, yeah.
questions?
No, no. I think that we are done with the questions. Thanks, Prashant. Thanks for the excellent session. It was a really illuminating session for all of us. Hopefully, next time we'll have Rahul also, so that we can talk a bit about the emotions of holding on to the
Yeah, yeah,
trades.
absolutely. He'll be there.
We'll
Yes.
discuss that. Also, you mentioned like it is like a spirituality. So
Yeah.
I would just like to tell everyone that a lot of effort goes into technical analysis. It's not as easy as it seems, and there's something called as back testing, where we test all the strategies. So hopefully next time we'll talk a bit about back testing
Yeah, we
also.
will. Yeah.
Yeah, yeah, sure. Thanks,
So,
Prashant.
and we also talk about the journal, okay, which
Yeah.
is the heart of any business, that is accounting. So, we'll talk about that. So, Happy New Year in advance to all of you. We'll meet next Tuesday.
Thank you all. We'll end the session now.
Thanks. Yeah.
Thanks a lot, Prashant.